Hey everyone, and we're back. It is Wes with Pikes Peak Trades, and we just wrapped up trading for January 20th, 2023. And I'm really excited about where we're at right now here in market structure and in timing. We've got two huge weeks of earnings coming up. Big tech is my focus. And so I'm going to spend a little bit more time in this video talking about some of the big tech names coming up with big earnings. We start out with Microsoft on Tuesday the 24th, Tesla the next day, Intel after that, and this coming week is chock full of all kinds of other major companies: GE, Johnson & Johnson, Boeing, Halliburton in the energy sector, still more financials to report. It is going to be, I think, market moving, and I'm going to show you where we're at. You're going to see that we are right at an inflection point. I'm going to explain, I think that if this is going to be the breakout opportunity for bulls to put some nails in the coffin of the bear market, this is where it can happen. But you're also going to see clearly that if the market is deciding it wants no more part of these big name stocks, at least for the intermediate term, this is also where it's going to turn. So we need to be ready both ways. That is why I always want to look for more than one scenario, because I don't have a crystal ball. This is all about possibility and probability, and it's going to be really telling through Wednesday to see what happens. And I'm going to try to flesh it all out here for you. Okay, so backing up again onto big time frames. We've been talking about these monthly charts, and you're going to see we are closer, in my opinion, to a break up and out than we are to a breakdown. Now, that could change with negative responses to earnings, but we're going to see here SPX monthly. It's going to take about 40-40 to get up and out over some significant resistance. We take that now into the weekly. You're going to see it is an interesting looking candle. This is not a hanging man. I think it is more like a hammer that this week poked back through the MA cluster, showing you that on the bull count, this would be after a minor 1-2, a minute 1-2. Whether or not that is done is yet to be decided on the small time frames. But I want to make the general point that we are much closer to breaking up above a 40-30 pivot and a 40-40 weekly 50 SMA than we are to breaking down. Now, obviously, we get a terrible reaction this week. This is at a bearish fib. QQQ is a little higher, but you're going to see that. It's possible. If we lose 38.75, we tumble out of this proposed bull channel, then we've got to give the red count some possibility here. But based on where we're at and with the potential earnings catalyst, my primary look for the next few weeks is up. Let me show you on the cues. I think we are at an even more significant inflection point. We closed the week green, unlike SPX. We had some strength in big tech, maybe anticipating these earnings reactions, and it closed just right beneath some significant EMA at the 21. And if this is going to move, this is exactly the timing and the place for it to happen. Now, like I just showed on SPX, this is also where the bears would reject beneath the December highs at a potentially bearish fib. And so we do have to give that cycle count a little bit of thought here if we get a nasty reaction this week to start these big earnings. Okay, let me show you just real quickly. I'm not going to talk much more about small caps. I focused more on that last week. That IWM is relatively healthier. It did close above that 50-week SMA, unlike SPX, and on the daily, already above multiple days, a week's worth of price action above the now flattening 200 days. So I offer the possibility that small caps are in an even stronger technical position than anything else, and it is possible that we see a tremendous rally in smallies coming up. I will show you that small time frame because I had said on the other ones, I'm not sure yet exactly if the pullback that started midweek. I'm not sure if that is done. So the thought here would be that if the initial reactions to Microsoft and Tesla are bearish, that we could get a second leg of selling down, and that would just catch a more typical minute 2 fib zone. But everything ticked into a potential fib zone to satisfy all of that minute 2. So what you're going to see throughout my small time frames in either purple or blue is a count that shows this previous week's Thursday low holding, and then any pullback is going to be bought, whether it is retracing all of Friday's move. This would be my preference because that would likely happen into Microsoft earnings with an earnings reaction that's very positive, or we'll see here in a little bit on the small time frames, SPX and QQQ, that we could still see a negative reaction for Microsoft that doesn't break this week's low. Okay, now let me get into some of those details here on those small time frame charts. So let's look at SPX. I also want to talk about how on Friday, there was just a really phenomenal buying place and some reason to hold for continuation. So we had the move up and then the move down into Thursday's close and early Friday morning. You're going to see a little bit better on Qs. I thought there was great RR to enter right away, but if you did not, once we cleared the gap fill from Thursday morning, we had a retest here of that level. This was the place to go long, and that would have got you 50 SPX points. Now I'm going to show you on Qs where I entered, but let me go ahead and talk you through the rest of these ideas in the short term. So we've got here what I just shared corresponding to IWM. Could be an A, B to a C down if we get a negative response through Microsoft and Tesla. Now, I haven't fleshed out here bearish red. I'm only going to do that if we break below these typical fib zones and with just massive distribution like selling. Then we're going to have to fib that out. But for right now, what I'm looking for is the possibility that we just get a small pullback Monday that could be bought to complete a 1, 2, 3, 4, 5 up with a 2 down. Now, this could still be a negative reaction to Microsoft or Tesla, but just set a higher low against this previous week's low before we move up strongly into the rest of earnings season next week, because that's when we're going to get Google and Amazon and Meta, among many other names in industrials as well. Okay, I want to just also show you correspondingly on SPY that I think SPY again is showing you we are much closer to breaking up and out than down. So I think bears really here are stretched to their limit with both structure and time. They need to see a massive sell-off over the next month in order for their most bearish projections to play out. But just look how close we are to getting up and out. That's why I think the probability leans bullish. We closed just right at, I mean, really right at, within pennies, the 200-day SMA above what this is a more than a year-long volume POC. So we've got here a balancing point of buyers and sellers. And so when I say we're at an inflection decision point, this is really what I mean. So we've got the potential to rocket up through here, these earnings, and that's your white count. I take you into the shorter time frames. The purple fib is what I just showed on SPX, but I wanted to share another variation. So like I had proposed on IWM, if we initially right away, Monday, possibly into early Tuesday, if we pull back just to test the 390 pivot and fib zone, I've got this as a completed 1, 2, 3, 4, 5. Now, this actually does count validly. 3 is bigger than 1, and 4 did not touch into the price of 1. So we could see that right away early in the week. And because I thought we finished down here technically in some overbought territory, there was no way I was going to hold long into the start of the week. I want to see how things shake out here Monday and Tuesday into that Microsoft report. And then I might decide, I rarely do it. I certainly won't add any common stock. I might take, a premium paid lotto position based on structure that we're leading into Tuesday afternoon up into that report. Okay, so now let's get into the more into Qs and the big tech, and we're going to see again very similar things here. I have this as a 1, 2, 3, that small pullback 4 to retest, let's say 280, 281 before a move up that completes 5 waves. Then we could see that retreat. Possibly that's Microsoft and Tesla weakness, and then that bull count would say the rest of February is up and strong. Now, this blue fib is what I just showed on SPY. Was this a 1, 2, 3, 4, 5, and we're done with this sub-minute 1, and we pull back to retest at this 0.618. That would correspond to 290 on SPY. Let's just be open to that because we want to make sure that we keep possibility and probability in mind, especially when we're getting into news-driven catalysts here. Okay, so now let's get into the small time frames for our big tech. And we want to start with Microsoft. And you're going to see that I have Microsoft counting exactly like Qs. A 1, 2, 3, pullback 4, 5. This could pull back into the earnings report. To me, if that happens, if we get this 2 into Tuesday afternoon, I am probably going to take a call long flyer on a 3 of 3 up. It's also possible that we could have variations. That pullback could happen well before Tuesday. Then if we trace out on the small time frames, maybe a higher low against it, I would still think that that would be a buying opportunity. So you can see that my short-term buys here is leaning positively, and that is the way that I'm looking, especially when we've got these potential breakout structures and wave counts. Okay, let's also look at Tesla. Tesla, this is traced out really well since I shared this alternate as this minute 2 low. Then we had a big gap up on Tuesday of this week into a 1, 2, 3, 4, and now this could just march all the way up into Wednesday's report. We're just gonna have to wait and see exactly how this all plays out, but it's all there potentially for it. Okay, now also obviously Apple is just so key to market weighting and movement, and you're gonna see I have it again in the same potential possibilities of QQQ. Do we get some weakness? Maybe Apple moves back to test right into here. That would be one of the December highs. And then do we see a 1, 2, and then that move up strongly into its report that I think is on February 2nd. Or as we've seen, do we get this A into a B? It's a high fib. This 0.886 fib, it was at the 0.786 on Qs. That reduces the probability, but it doesn't take it off the table that we could get an ABC down through those initial big tech earnings. And that would show you a lot of confluence right here in the low 130s there for Apple. Okay, so that's as far as I want to go. I don't want to overwhelm anybody with names and variety and time here. It's going to be exciting. I am really interested to see what happens, especially early in the week. I think the majority of any big size move needs to be saved until we see what's going to happen with Microsoft and Tesla. Anything that I do is likely going to be short-term scalps or possibly a call lotto that I mentioned if structure presents it going into Microsoft. And then backing up, let me go ahead and just back up and just show you, where we're at on that inflection point. Are we going to break up and out? If we are, it's going to be led by the big tech, or do we reject right at bearish fibs? And does big money decide it wants not much to do with this market for the majority of 2023? So super exciting times. As always, know the possibilities, know the probabilities, be on your toes. Don't be locked in directionally any one way. And I'll leave you there with that short-term Q so we can see what I'm looking at two potential pullback possibilities, maybe a bigger one up into the Microsoft report. And then I think a lot of excitement over the next 2 weeks with these earnings. So have a great weekend, everybody. Take care. And as always, I'll check in again with you midweek and next weekend.